So you think about it, right? Screenings, it's kind of dangerous a little bit for property owners and
Hmm.
operators. It's gotten to be a little risky, right? A lot risky. And then it costs them a lot to process applications. How many applications do they have to process before they get a qualified renter to move in? In the meantime, people are spending the money to apply and pay for that application fee and get rejected potentially.
Yep.
The whole system, in my mind, should be inverted such that a renter can screen themselves and go to a property and say, here's my screen. Am I eligible? And then with a very reduced cost, be able to complete an application process and move in,
Yep.
knowing that they're going to be accepted.
Friends, welcome back to Peter Lohmann's podcast. Today I have with me Janine Steiner Jovanovic. I am so happy to have you here today, Janine.
Thank you. It's such a pleasure to be here finally, Peter.
Yeah, so you and I got a chance to connect a couple months ago now, and really it was exciting for me to learn about your background in our industry, and you have an extremely impressive resume, and it was fun talking about sort of your history with property management, which extends even when you were a kid. So I'd love to share a little bit of that with the audience, if you don't mind kind of bringing us up to speed on your background.
No, my pleasure. Yeah, I did grow up in the business, family business, and had a chance to really learn multifamily from the ground up. And it was pretty early on that I caught a technology bug. When I first had the opportunity to work on site in systems, it was AMSI. So a little while ago, DOS based, and over time had the privilege of working on some really cool, interesting projects that were innovative and game changing, and decided that was where I wanted to spend my career. So started out in consulting, Pricewaterhouse, KPMG. They had emerging technology transformation groups for real estate, did all different kinds of real estate with them, and settled back into multifamily, which was really where my heart is, where my passion is. Everything I do now, touches people's lives, people's homes, and I still prefer to focus on the technology side of the house, but knowing that, I'm actually making a difference for people's lives makes a huge difference for me.
Yeah, absolutely. I'm curious, back in those days when things were moving from like DOS-based to Windows to eventually web-based, it feels now like things are changing really fast with AI and all the other technologies. Did it feel the same back then as technology marched from paper ledgers to computers to online? Like, was this feeling of, wow, things are changing so fast, I can't keep up? Or did it feel slower?
It actually felt the same to me. I mean, I was there for the creation of the first web-based systems for property management, and it was equally, I think, game-changing. I'm enjoying the fact that AI is accelerating some of the efforts that are needed today for our
Hmm.
industry to achieve its goals. Similarly to, what I saw, the possibilities I saw created back then from the internet, I do think it's very similar.
Yeah. I mean, it certainly feels quick right now. And even in just the last year or two, it feels like it's accelerating. So I've heard, things come in waves and cycles, and it feels like another one of them is it's kind of swamping the industry right now.
I would agree with that. Would also caution that, AI is not as mature as we all want it to be. And even though it's maturing quickly, being careful, cautious, planning, piloting any solutions is the key to making sure you have a successful outcome.
Yeah. So I want to move now to LeaseLock. So you're CEO of LeaseLock, and LeaseLock's actually been on my radar for a while. I did a blog post, which some longtime listeners may remember, about security deposit alternatives. This was many years ago. And LeaseLock has a totally unique model. And I even called it out on the little table that I put together. It's not like any of the other security deposit alternative products. I'd love for you to share sort of the philosophy behind and the how it works. And then I think we're going to have a fun discussion about some of the details on tenant screening and what works and why security deposits are the way they are and why it's been difficult to displace them.
Yeah. I mean, security deposits have been around since the beginning of rental housing, which is a long time. And their goal is important, which is to protect property owners from the losses that can happen if a renter leaves and doesn't pay what they owe, or does a lot of damage to an apartment unit. The challenge is that over time, deposits have become very risky to manage. They're, highly regulated. There's increasing attention from lawmakers on them, and renter protections are a big focus right now, especially for certain states, and even to some degree at the federal level. So there's like a lot of risk associated with just deposit handling in general. So you'll see there's been an increase in legal suits, and so that's just increasing over the last few years. So outside of just kind of that part of it, which can be very costly and difficult, there's just the fact that deposits don't cover the cost of bad debt. And, the industry is focused on occupancy for a while now. And since COVID, it's been, certainly the priority. It remains the priority. It's challenging to get rent growth for lots of different reasons, whether there's different market conditions, new construction, lots of dynamics that are preventing us to kind of get back to normal rent growth. And what happened is over the last few years, with the focus on occupancy, with the challenges on rent growth, you see an increase in bad debt, and it corresponds with some of the patterns of discounting deposits. So the average deposit went from like 1 month pre-COVID to, we're around like 400 or 500 now. So if you look at, the REIT earnings calls to some degree, but just, I have access to millions of units of data, you just see the write-offs going up and up and up. And so that just means deposits aren't working, right? If we can't collect enough deposits to cover the cost of the write-offs, we can't grow our rents enough. We already have a challenge with income. Product like ours just is very handy because it can provide a substitute that protects you, a lot more than what a deposit can.
Yeah, there's some really interesting dynamics that happen at apartment communities that are having trouble with leasing or having trouble with rent. They're like, there's pressure from above to fill units, but also keep the average rents high, which is important for financing reasons and valuations if the property is going to be sold. And so something's got to give, right? If you can't really lower the rent and you can't accept a lower occupancy, you have to make the overall offer more attractive to prospective tenants. And one of the ways you can do that is by reducing the deposit. This isn't as much of a thing in my world, single family rentals, but this is a huge lever that gets pulled in multifamily. And I remember when I was leasing from one of these new build apartment communities, they were running like a special for lease up. It was like a $250 deposit or something. I was like, oh, this is great, right? And so what LeaseLock does, if I understand the product correctly, is it's an alternative to another product we're not super familiar with in our world, which is surety bonds. But a surety bond is an alternative to a security deposit, which I'm sure you could explain better than I can. And then LeaseLock is basically an alternative to that.
Yeah, so surety bond was kind of the original deposit replacement. It's been around for a long time. There are a lot of people offering kind of those direct to consumer, help you get in a unit. It's really more targeted for renters that can't afford to get in a unit, or they can't pass screening criteria sufficiently. And, so that's one way of looking at it. The way we designed our solution, it's true insurance, not a bond. So it's insurance for a property, not dissimilar from property and casualty insurance. We insure a property or a portfolio, and we don't evaluate renters. We don't look at renter credit. We don't, need or care about anything specific to a renter. We're looking at property dynamics the same as you would if you were underwriting a deal or putting a budget together. And the better the property's managed, the better pricing and more coverage we can give. And then it's for every renter. So every renter that comes to the door, it's really presented as a leasing amenity to help with leasing, similarly to a deposit discount. So we charge a small fee to the property. The property passes on that cost to the renter and enrolls the renter in the lease insurance we provide to the property. So call it $25 a month, which is around our average. A renter can get in and pay that in lieu of having to, leave a deposit. They don't know that there's insurance on their lease provided by LeaseLock. They don't even know LeaseLock exists. They just, know that the property offered them a really cool option, which was to lease deposit free in exchange for this non-refundable fee.
And then as you were describing the surety bonds there, I was immediately thinking, and I just recently read through Derek's blog post about failed math, which is a fascinating sort of analysis of surety bonds and why they don't really work well. They've got an adverse selection problem. And yeah, I mean, if the only people who are taking these bonds are people who sort of don't qualify or don't have the money for a traditional deposit, I don't even need to do any math to tell you that's not going to end well, because any product that is attracting only the worst types of customers is not going to, it's like pooling the risk, but all the risk is bad. There's nothing to pool it against. So the strategy of enrolling the whole property totally makes sense to me, because it's like, hey, we know there's going to be losses with some, we got to offset that. This keeps it affordable for everyone. That makes complete sense.
It's more like health insurance in that way.
Yeah.
And renters still have a choice. They're not forced to enroll in the program. We get majority enrollment because renters clearly prefer to not have to leave a deposit, but some still want to leave a deposit, and that's okay too. Yeah.
So it sounds like renters, come to one of your customers' communities, and the leasing agent says, great news, we have you can pay the 1 month's rent security deposit or $500 or whatever it is, or you can pay $25 a month or whatever the pricing specific to that property is.
Yeah, exactly. Right. That's right.
And the property owner or the property manager, they pass that along at cost, or do they mark up that fee?
We allow them to mark it up just a nominal amount to cover administrative burden, because there's still work involved in managing the program. For example, filing claims, right? So if a resident moves out and leaves a balance and they file a claim, there's effort involved in filing the claim and managing that and applying the payments that we give them. And so we allow them a small markup for that.
Okay. And what's like the average take rate on this product at the communities that offer it?
Yeah, there are the communities that offer it the best and really promote it optimally, get 90 to 95% take rate.
Oh, wow.
Yeah. So, and our average
is amazing.
Our average is probably closer to 80% because there's a variety of ways that, customers are promoting it. If you do a really good job of, presenting it on your website, if you embed it properly in the leasing process and your chatbot and your self-guided tour, et cetera. So, it's really, we provide a service and we rely on our customers to advertise that service to their customers. So take rates often dependent on how they advertise it, but it's pretty high.
Yeah, that's awesome. And what's stopping a property owner from just implementing this themselves? They're just like, they get the idea. They're like, okay, yeah, I could just charge $20 a month, $30 a month, keep all that money, set it aside in an account somewhere, and just pay out claims, or just use that money essentially to offset damage to the property.
It's an interesting idea. There's a lot of difficulty with doing that if you're not a REIT, for example, because you have different ownership entities for each property. And, there are rules about kind of sharing cost and risk across portfolios where you have different ownership structures. So it does not work where you have JVs or you're doing fee management. And you're also taking a risk that whatever, you're collecting, if you're not really doing a good job of managing your renting, your collections, your move out process, you're taking on that risk. So if you're upside down, you're going to have to cover it. So I would say some of the really well run, companies that have a single owner that can kind of control their whole portfolio and spread that risk like a REIT. I know that one or two of them are doing that.
And is that like, because when I think through this, I'm like, all right, but am I offering insurance if I try and do that, which I know is kind of not allowed in like basically all states?
It's basic. It's so if you're doing that, you're charging a flat fee, and you'll call it something like a move-in fee, a risk fee,
hmm
and you'll pull that amount. Again, I really only know of one or two companies that are doing it and doing it successfully.
Today's episode is sponsored by Utility Profit, and they have a special offer just for you, my listeners. For a limited time, they'll pay you $500 to try their utility setup confirmation tool. Go to utilityprofit.com/Peter to learn more about this offer. Now, you've probably heard me mention Utility Profit before. It's the free tool that completely automates confirming utility setups for your tenants. They don't upsell your tenants, they don't mark up anything, and when tenants activate certain utilities, they pay you. It's such a no-brainer that most property managers say the same thing. This sounds too good to be true. But I'm here to tell you, Utility Profit really does what they say. They take utility setup confirmation off your plate entirely. And for a limited time, they'll pay you $500 to prove it. So if you've ever thought about checking them out, now is the perfect time. Visit utilityprofit.com/Peter, book a quick demo. You can see exactly how it works, how they make money, and how you make money. Getting it synced with your property management software takes about 15 minutes. And when your first tenant sets up utilities through the tool, they'll send you your $500. Love it. That's utilityprofit.com/Peter to book a demo and claim your $500 bonus. Thanks again to Utility Profit for sponsoring this episode. I'd love to share a little more about your background because in the show prep, we got to hear about your experience coming up in the industry and really being an innovator from a really young age in terms of operations and systems. I really geek out on that stuff, so I'd love to share some of that.
Sure. Yeah. I have a master's in comparative literature, and I originally wanted to be a professor of the Enlightenment period, fluent in French and German, and then all I knew work-wise was, working for my family, summers, vacations, whatever, leasing apartments and helping in the office. And I definitely fell in love with, real estate. So when I decided to pivot and go into business, I asked my dad, what if he had anything for me. And he's like, well, actually, I can't get good data out of my apartment buildings. And he had a handful around the Dallas-Fort Worth area. And he said, I want you to hire some programmers and build an asset management system for me. And that was just revolutionary in the early 90s. Nobody did that. I mean, he spent $100,000 back then. And
Wow.
I got to hire a team of programmers and build really the first commercially available asset management system for apartments. So, that was a lot of fun. We sold it to what is now, a very prominent REIT. And through that process, I got introduced to Pricewaterhouse, and they recruited me to come and do more of that for them. And it was just, really cool and exciting because I'm working on all these different projects. Some of them were custom builds. Some of them were implementations of, ERP systems with a little custom, but data analytics, talk about geeking out. I am a data person. And when you can pull information together to make better decisions, that's what floats my boat. But over time, I did do a lot of, software implementations. I helped, ended up going to RealPage and helped build their platform out early on, take it public. And I ended up running, about half the company. Insurance ended up being, something that I just fell in love with. So when I was given the opportunity to get involved with LeaseLock, I jumped at it. But at the end of the day, I mean, I'm still at heart, I started out a programmer. I'm glad I did. I think it's important if you're going to run a technology company to actually understand well enough, the actual tech side of things. And, maybe I dabble a little bit here and there every once in a while. My kids like to make fun of me.
What are you seeing right now in terms of, when you dig into the data across these millions of units, is anything jumping out that's changing or that's surprising, whether that's fraud or changes in occupancy, changes in debt, defaults? You've got a firsthand look at stuff we're going to read about in the news a month or two from now.
Yeah. So, and we're working on a risk analytics solution for our clients. We have a few beta customers involved with that because you hit the nail on the head. We see it coming in our data. And this isn't new news to you or anybody else. Post-COVID, fraud was introduced in a way that was very novel, and it's continuing to be a problem for the industry and a priority to, address renter fraud, getting responsible renters in the door that are going to stay through their lease and pay you along the way what they owe you is critical. And so we did see in the data an increase in delinquency and evictions in certain markets where there was just a ton of fraud. And then I saw the industry fix it and apply new products and solutions. And it went back to what I would describe as, close to normal. I
Mhm.
still think that screening is a challenge because it's another topic of interest to renter advocacy groups and lawmakers. And so just like with deposits, screening's becoming a challenge to manage. But I do feel like the industry's extremely focused on it. And because of that, I'm not seeing that cause a lot of challenges for a company like ours, where we have to track the quality of the lease, the, delinquency along the way, and the outstanding balances that move out. So I think the industry's done a really masterful job in the last 2 years addressing this issue.
What's contributed to the solve? Is there particular approaches or products you've seen that really helped solve this?
A lot of it had to do with just document validation, application,
Okay.
validation. So it's is the bank statement provided? If it's not you can actually connect directly to people's bank accounts now. And that's a lot of the solutions do that, right? And a lot
Mhm.
of companies rolled those solutions out in the last couple of years. And then if documents are provided, whether it's ID or bank statement or whatever, and they're tampered with, you can now detect those things. And so there's a lot smarter AI driven solutions to help with screening that, that have solved the problem to a large degree for the industry.
Yeah. I have a weird question. Is fraud correlated with anything? Like, is it correlated with evictions? Is it correlated with skips or bad debt? I have this, it sounds like a strange thing to ask, but sometimes I wonder, it's like these people who are willing to go through all this work to create fraudulent documents and fraudulent pay stubs. It seems like it would be stupid to do all that and then get evicted because you couldn't pay the rent. So yeah, I just thought it's kind of funny to imagine a world in which there's just no correlation whatsoever and fraudulent applications are just as effective as tenants. They make good tenants. They don't get evicted. I'm sure it's not true, but
There's no data that's been analyzed to explain what you just asked, and it's because it would be so dangerous for anybody
mm,
to touch that. I wouldn't touch it.
got it. Yeah, because I guess in order to really run the study, you'd need to like detect fraudulent applications and then let them move in, which would be, no one's going to do that.
Well, you're also there's gonna end up being PII involved. So let me be clear: the industry and others. I mean, there's a lot of funds that have been raised to kind of defend the industry against, to some degree, villainization over the last few years, which was unfounded in my opinion. But the renter advocacy groups have 10 times more funding, maybe 100 times more funding to go after the industry. So there are just certain things certain topics, certain areas that we just need to be careful about digging in on.
Yeah, can you say more about that? Because I'm not too familiar with how things work at those high levels. When you say the renter advocacy groups have like way more money or there's certain things we need to stay away from, I'm curious about that.
Well, just the concept of, similarly to the concept of adverse selection, right? We don't want to, do analysis, dive into information that is, potentially specific to a certain type of renter, a certain category
Mm,
of American, and then, lead to outcomes that are unintended as a result, as
yeah.
far as like how we screen. So it's better to kind of remain at a certain level and remain objective and do your best to be preventative and proactive around, your methods, but in a way that's invisible to the individual that you're actually screening.
Yeah, tenant screening is something that's long fascinated me. And yeah, I've got this line I always say, which is if you ask 10 property managers a question like this, what should be the rent to income ratio? Mr. Property Manager, what's the minimum income you like to see in order to approve somebody for an apartment? A lot of them are going to say 3 times the rent, or maybe they'll say 4 times. And then you ask them about credit score and you get 10 different answers, 600, 700, 660, whatever. And there's no science behind it. There's no data whatsoever. I always think it's funny when they give you the 3 times the rent and income. And I'm like, really? It's 3.0. It's not 2.9. It's not 3.13. It's completely made up. It's obviously just like a back of the, this thing that we've all repeated because the people we learned it from who they learned it from. We're all just saying it. It feels like we're in the dark ages with tenant screening, honestly. There's very, very little data around outcomes. There's great white papers, I've read them, that show outcomes are correlated with credit score. And we have good scoring products, but we don't have products that take into account the whole picture: credit, criminal, eviction, renter history, and credit. And I worry a lot for the industry because I think credit scores and credit history are eventually going to be outlawed completely from being able to take into account when making a tenant decision. So I'm curious what you see, because your product is very tied up with renter outcomes. You have to be able to price your product appropriately. So I'm wondering if you've done any digging or have some secret, and maybe if you did, you can't share it because that's part of the secret sauce, but just curious your thoughts.
We don't get access to screening data. We don't look at screening data. I have friends in the industry who've worked. I ran screening at, another company, over 10 years ago. So I was in screening, knee deep for a while. But, we're looking at ledger-based information specific, not to the renter, but specific to the property. So we're looking at lease. We care about the lease, not the renter. I will say, though, if I had to predict something, and I hope I'm right about this prediction, renters in the next couple of years will be empowered to screen themselves. And it's going to be a question of, matching up your screen with properties that fit. And it's different than qualifying yourself for a mortgage. We can pre-qualify ourselves for lots of things. I don't see why renters shouldn't be able to do the exact same thing. And it's very expensive to apply for, apartment. The application costs are, so you think about it, right? Screenings, it's kind of dangerous a little bit for property owners and operators. It's gotten to be a little risky, right? A lot risky. And then it costs them a lot to process applications. How many applications do they have to process before they get a qualified renter to move in? In the meantime, people are spending the money to apply and pay for that application fee and get rejected potentially.
Yep.
The whole system, in my mind, should be inverted such that a renter can screen themselves and go to a property and say, here's my screen. Am I eligible? And then with a very reduced cost, be able to complete an application process and move in, knowing that they're going to be accepted.
I see Zillow making moves in this direction right now.
I will say Zillow has not been very successful at, acquiring the application business. I mean, they are powerful listing service, and that's kind of their sweet spot. I know they want to get into the application business, but there's a lot of competition from, software providers that provide a fully integrated suite.
Yeah. I've been talking about this a little more recently. In our world in particular, rental homes, it's Zillow or you're not leasing the apartment, basically. They control all the major listing platforms, and they drive 60 to 70 to 80% of the leads that turn into leases for us. And so if Zillow wanted to get into the tenant screening arena, in my world at least, all they would need to do is say, you're going to let renters run through our screening process, or you don't get to list your property with us anymore. It would be that simple. And we would say, great, where do I sign? Because we don't have a choice. We
Yeah,
don't have a choice.
that's interesting. That's an interesting perspective. I like it. I like it.
I
So
I think multifamily operators have a little more flexibility. There's more competition in that space for listings, and you have very nice big property websites with budgets to drive marketing. And there's other ways to fill units, but in our world, it's a little scary.
no, I hear you. Google and website are the two top, lead gen sources for multifamily. But I hear you about Zillow's power and influence over single family FR space.
I want to ask you about your sort of renter first approach with the product and just your philosophy, which is very much, you mentioned on the pre-show that the founder of the company, it all started because he couldn't afford a security deposit. And so baked into the DNA of LeaseLock is this idea that like, hey, renters aren't an asset to be exploited. They're actually kind of our North Star. We want their experience to be great. How does that show up in the product design and the pricing and how you work with the property owners?
Yeah, I mean, we've essentially established governors on the product to protect renters from our product, being used to, take advantage of them. So, some of the, like we require the product to be used on a majority of leases so that we can maintain the best possible price. So we have that balance of risk that you were talking about earlier on. We also don't overcover, so we don't provide too much coverage because that makes the price go up. And sometimes it could be
Hmm.
used to mask operational deficiencies. And that's not what we exist for, right? We exist to accomplish what deposits were intended to do, but have failed to do. So we don't offer the program in such a way where we're not designed for, really poor operators who don't do a good job at screening and managing their delinquency. We have all different flavors of clients. We have Class A, urban, high rise, workforce, lots of workforce housing all over the country. As long as, you're a good operator and you're managing your property well, you're going to be a great client for us. But we do have these governors that we've established to make sure that the product's not misused.
Today's podcast is sponsored by Second Nature. So listen, renters today can order dinner from their watch, get groceries in an hour, and track every Amazon package to the minute. But in property management, we're still sending residents a stack of PDFs and calling it onboarding. That's why Second Nature just launched the industry's first resident experience platform. It's a modern, guided onboarding experience for residents. Instead of confusion and endless emails, they get a clear, step-by-step walkthrough of everything they need to know: their lease terms, move-in tasks, and resident benefits. All of this is powered by Maestro, the industry's first tool for composing personalized resident onboarding workflows. It lets property managers customize experience based on property type, market, or resident profile, and even push portfolio-wide lease updates in just a few clicks. For property managers, this all means fewer questions, less admin chaos, and a better first impression that drives renewals and retention. This isn't another nice-to-have tool, it's a total rethinking of the resident journey. It bridges the gap between what renters expect and what they actually experience. Bottom line is, happier residents stay longer, pay on time, and make your life easier. To see how it works, check out secondnature.com and learn more about their new resident experience platform. Thanks again to Second Nature for sponsoring this episode. It seems to me a lot of the discussion and the activity in our world, in the PropTech world and the private equity world, it's everyone sees the rent flowing through our industry and they're like, hey, how can I get a piece of that? Let me get in on this. Let me figure out how I can dip my hand in the stream, either through additional fees or through just monetizing the resident in 6 different ways. So it feels like you're going against the grain a little bit. It's refreshing, honestly, to hear. Do you feel like that's paid off in any tangible way? I know it feels great and it aligns with, your cultural values. Are you seeing any kind of like, hey, we're playing a long-term game here, rewards come back around?
Well, the economics of our business are incredibly healthy. So it works. What we're doing, works and everybody gets to benefit. We make our numbers Our insurance carriers that provide us with reinsurance are happy. The property owner gets the offset for the write-offs that, they want, and the renter gets a chance to live in an apartment unit, move in and live in an apartment unit without having to pay a deposit for a nominal fee. And so
Yeah.
everybody wins. Everybody wins. And, so yeah, this isn't like, oh gosh, we're planting seeds for doing well in the future financially and forfeiting, profits. It's we can do
It's working now.
really well. And I have said before, we could make more money, but we don't.
Yeah,
Because
I was going to ask you about that. The temptation to increase that monthly fee by just $1, or the temptation to let the property manager, take a larger cut as a way to help your salespeople win more properties, must be enormous. It must be huge. Like the temptation must be big, and because what tenant's going to complain about an extra dollar per month? It's spread out over so many units, but that would be all margin for you guys. So I really respect, because it's got to be a hard line to hold.
well, you know, Peter, the vast majority of our clients had no price increase or a price decrease this year. And
Wow.
I'm really proud of that. And the goal is for us to control the costs for the renter while still being able to offer the industry everything they need, and for us to still make, appropriate profits. And we're able to do that this year without increasing costs across most of our book.
That's really impressive. How does it work, or do you work with people who are managing sort of smaller, 4, 8, 10 unit properties, or even SFR?
So, we're an insurance company. We have an underwriting model, just like all insurance companies. So, you need a certain amount of information to underwrite. Once you get into really small numbers, it's really difficult to underwrite. And so we work through channel partners to get to that space. There are different providers that provide leasing solutions, et cetera, and they offer our program through their platforms.
Oh, okay. And any names that I would know in our space, like the NARPM world?
Apply is
Okay.
our primary partner in the space.
And I think when we talked before, you mentioned that it was actually an area of focus, is kind of like bringing the solution to more and more, even smaller operators or smaller properties. Is that like a growth channel for focus?
Absolutely. It's represented a pretty substantial amount of growth for LeaseLock this year, working with our channel partner, Apply. And we have found there's an increasing amount of interest in the, single family rental and SFR space in general around having a deposit alternative.
Okay. And what happens if when the tenant pays the monthly cost, does that then exempt them from paying what they owe when they move out, whether that's the last month's rent that they didn't pay or damage to the property?
No, actually not. So the way the program works, the program's presented as a leasing amenity, and the resident pays the small monthly fee while they're living there. And the vast majority of the time they move out and don't have an outstanding balance. But when a resident does move out, doesn't pay maybe their last month's rent, or does a lot of damage to a unit, let's just say that they owed $1,000 and the property was unable to recapture that from them after move out. Property could file a claim with LeaseLock. We send them whatever is covered. So let's in this case say $1,000, and then the property's done. It doesn't have to pursue the renter. If there was a reason for them not to have been able to collect the full amount of the outstanding balance, let's say the renter left with $2,000 and they only had $1,000 of coverage from LeaseLock, they could still take the $1,000 the renter owes after the claim is paid, and they can continue to pursue the renter for that outstanding balance. But there's never any communication with the renter that they're signing up for something that's insurance. And as a part of the lease, it says, to be clear, you're paying a non-refundable fee in lieu of having to pay a deposit. You understand you're still responsible for paying everything you owe and
Yeah.
leaving the apartment in good condition.
Got it. And then would you guys then try to get recouped from the resident who owed the money?
No, that's another huge differentiator between us
Okay.
and every other product on the market. We do not subrogate. It, again, fits in with our mission of protecting renters and offering them a program that helps them obtain housing with no consequences from LeaseLock.
Okay. I mean, I hear that. You're also kind of letting them get away with something. It would be a different way that I would put that. Like, hey, they kind of owe somebody this money, it seems like. I mean, what's the incentive then if they understood the program to even pay that last month's rent?
They don't understand the program. And
Okay.
I'll give you the fact that supports why renters don't know. We've been around for a long time, and we had our first lease enrolled in the program in 2017. And when you look at the number of renter default at the end of a lease after move out, it's about a third. So about a third of the time, a resident will move out and leave some type of outstanding balance with deposits. With LeaseLock, it's the exact same. About a
Hmm.
third of the time, a resident will move out and it will result in a claim. And so we know that it's working, that residents understand their obligations because the behavior patterns are the same.
Yeah. Because they don't know that you're not going to go after them. And I won't tell them.
Well, the property does, thank you. The property does make an attempt initially after move out to collect from the renter, and they have to, wait 30 days to file a claim. So that there is some amount of recovery that happens
Okay.
first 30 days. So I think the residents don't necessarily feel like they're off the hook. You have to look at collections also in general. If somebody moves out of an apartment and leaves a balance, I don't know, are you familiar with what the statistics are around it?
Oh yeah, we do it here. I mean, we send our balances to collection. So I
But how much do
when the
you
checks,
get? How much do
I
you
don't know
actually
the
get?
exact number, but it's very very small.
Exactly.
Yeah.
The resident didn't have the intent to pay anyway. So it's no
Yeah.
different. Like you can keep going after them, but it's not going to change the behavior. That's my point.
Oh, I wanted to ask you about the broader prop tech landscape. So you've been an investor, you've been an employee, you've been almost a co-founder, CEO, very involved in the prop tech or real estate technology space for a while. What's happening right now? Because I can even feel it even from my little corner in Columbus, Ohio, that things have shifted a lot for a lot of our vendor partners over the last, call it 18 months. I don't know. Help us understand the landscape.
Yeah, I think, there was a tremendous amount of funding being thrown at prop tech before COVID. And over the last few years, it's dried up for lots of different reasons. So, if you have been using point solutions that were emerging and they weren't sufficiently funded or mature enough in their life cycle, they're having viability issues right now. And so that's impacting the industry, whether you're in, your corner in Columbus, Ohio or elsewhere. So if you were experimenting with, a small product that wasn't part of a bigger platform, it may or may not be able to survive, right? It's also just become, it's interesting with all the funding that went into prop tech before COVID. There were, I mean, in my opinion, my small opinion, there were too many startups doing the same things. And
It's heresy. I can't hear it. No, I'm kidding.
and it led to the use of a lot of products. So you have your core platform. Let's just say you're using something like AppFolio or Resman or whatever. You're trying all these point solutions. They
Yep.
aren't well integrated well. And so how much work and effort does that put on a company like yours where, you've got this little fraud detection solution you're using and this little self-guided tour and none of it's integrated.
Yep.
And then all of a sudden they're starting to have funding challenges and maybe the integration is really not as good and they don't continue to innovate as well. I see to some degree a return to platform plays and the desire to do more with less providers. And that's
Mhm.
also putting pressure on the PropTech landscape.
Another factor I've seen is a lot of operators these days are looking at some of the products that they're using and they're like, my buddy can code this with AI in like 2 weeks. My co-founder in Crane, Wolfgang Kroski, he's built a whole back end for Crane that we use. And he's also built like a Kroski OS, he calls it, for his management company that integrates. And I'm talking like with APIs and everything. I mean, it's wild what he's able to accomplish with no programmer background whatsoever. So it feels like from the seat of the operator, it's devaluing these solutions that we're used to paying, 50 cents, $1, $2, $3, $5 a month per unit. People are starting to wonder, like, geez, I mean, that's a lot of money for what feels like a fancy XYZ, something that I could code up.
Absolutely, especially if it's workflow focused. If you're trying to do something like manage work orders or the renewal process or something like that. Once you start having to have APIs and you try to do like screening on your own, forget it. You're not going to be able to do that.
Most people aren't going to do that. Yeah.
It's too complicated, it's too expensive, and it's too risky. But I agree with you for some solutions that they are going to be easily replaceable.
The platform comment is interesting, and I've watched through my involvement in the industry, 12 years professionally, that when I started, there was no integrations whatsoever. Buildium, Appfolio, none of them allowed you, Rentmind wasn't around. None of them allowed you to connect whatever software you were using to the mothership, to the accounting software. And then it's really swung the other way now, where they've mostly all opened up and they have point solutions that are on their marketplaces or on their platforms with direct integrations. And that's been great. And unfortunately, it hasn't really solved much of our problem, though, as an operator. And the way you really feel this is like every new team member you onboard, you have to set them up with like 8 logins just to do basic stuff. They need to get logged into your main accounting software. They need to get logged into your workflow software. They need to get logged into your maintenance coordination software. They need to get logged into Notion, email. I mean, your phone system. Like every PM operator has like 12 to 15 softwares that they're paying for and have users for. And the integrations have been nice because now we're not doing like double entry of data, but we still have all these different softwares that we're having to log into every day. So it's interesting you mentioned about, moving more toward a platform or consolidation. And I'm wondering, it's fascinating to see these dynamics play out over time. And it doesn't feel like there's been much of an attempt to really solve that issue of the 12 login problem yet.
Well, so a couple things, right? You guys at your level maybe aren't going to invest in this, but larger owner operators, they're going to single sign-on is the key to success for some of that. It achieves some help. But the other is to bury some of those products in the background and have them continue to do what they're good at, but create workflow solutions on top. Like using products like Salesforce. Not necessarily Salesforce, because I know it's expensive, but there are emerging solutions in the PropTech landscape that are workflow based, kind of like what we were talking about, where it can connect to all your different systems. So you don't have to log into 8 places to do something like manage renewals.
Or screen a tenant.
Or screen a tenant. So I think you're going to see more workflow-based solutions. And, I feel like this is a commercial for Apply, but I do think Apply has successfully done that. And so that's kind of their main thing. What they offer is workflow management for operations and pulling in the data from all the different places. So you don't have to log into every single one of your solutions. So I'm hopeful for even the, SFR space that there's going to be some great options available.
Yeah. I mean, any company that's working on this problem gets my thumbs up because it's just, as an operator and as someone who helps other operators and advocates for them, I want solutions that work for our business and for our industry. So anything else we should touch on?
No, I was just going to say it's unfortunate some of the big providers in the SFR space, not to name names, but they started out as just really cool, innovative, and they're just kind of getting like all the other dinosaurs that are, slow to innovate and make progress. And it's especially hard right now, as you said, to kind of stay on top of innovation when you're not investing heavily in AI and workflow management. And I think that's a challenge for your space. It's just the core property management systems, they're just slow to progress.
Do you find that you'll be able to implement AI with your product, either to help with underwriting or any of the back end stuff?
It's a great question. So we've always been AI. So, underwriting is machine learning and database, because that is AI. But as
Yeah,
far as the rest, we've spent the last year transforming our entire claims experience. I'm incredibly proud of it. We use AI to make it easier to file a claim, easier to track claims,
that's cool.
and we're able to we've we've tripled efficiency and time frame for claims processing with AI. And that's just one area we're using it. We're using it for, first line customer support to get customers answers to questions instantly. It's really, there's no area of our business where we're not using it.
Love that. Yeah, that makes sense on the claims experience. I think that's something that people definitely associate with the claims experience from any business is this is going to take forever. It's going to be painful. So almost feels like, is it even worth it? But if they know they can just submit it and there's some sort of AI processing that's helping just the whole thing go way faster, that seems like a win-win.
Yeah, we're about to release, whole document interpretation AI function that, will take like all the documents that you submit and pre-populate a claim. So all you have to do is review and hit submit, and you don't have to enter
Yeah,
anything.
that's great stuff. Awesome. Anything else you want to touch on before we wrap up?
This has been fun. I'm so thrilled that you reached out and we had a chance to connect. And I look forward to staying in touch and continuing the dialogue around some of these kind of things that are happening, trends in the industry. It'll be most interesting over the next year or two to see whether or not this AI, the AI innovation that we're seeing right now is more of a bubble or if it's really going to be transformative.
Agreed.
I'm on the fence.
Yeah, it will be fascinating. It's a fun time to be in the industry. So thank you so much, Janine. If folks wanted to follow along with what you're up to at LeaseLock, where should they connect with you?
Oh, yeah, absolutely. LinkedIn, connect with me on LinkedIn or check out our website at leaselock.com. And, it's plenty of good insights there. And yeah, that's probably the best way.
Okay, awesome. Thanks again, Janine.
Bye, Peter. Thanks.
If you like the show and want to get connected to the community, you can follow me on Twitter at PS Lohmann and subscribe to my email newsletter on my website, peterlohmann.com. I try to share as much valuable property management content as I can on a regular basis. Thanks again for listening and have a great week.